In this video, I'll show you why inside bars are causing trouble to you and what can be done. And I did this post on 19th of June that, you probably would have heard that just perfect setup and repeat it. But I'll tell you, if you actually take 50 or 100 trades like that, you will realize that out of 100, only 10, 15, 20, 25 worked. Rest of them did not work in your favor. And when you take this argument that why such less percent of stocks are working, you will be slapped with the argument that that's about the win rate. That is the win rate. You can still come out on top with a good risk reward. But there is one catch here. See, even in those trades that you have taken, it's not necessary that you are going to get that ideal risk reward, which shifts everything in your favor despite a low win rate or win rate. Many times you have seen it that things do not play out perfectly. There will be slippage, there will be volatility, there will be at times when you had to exit, you hesitate, and then there will be market noise because of which you miss a few ones, the good ones. And because of all these factors, that perfect risk reward kind of just remain the theory. And your account size and your account actually shows a different story. So just want to now make you aware through charts about this to put some light on this topic. I have kept a few stocks over here. And let's see what happened. Now, see, people will be like, see, there is a good candle here, right? And then the expansion started. And then you were like, sir, there is this candle where I probably would have looked to enter above the half of this one. At one point of time, the stock was looking really great, but came back in completely and hit my stop loss. See, whenever you see all these things, the first thing you have to check is the quality of expansion, followed by the quality of contraction. Once you are okay with that, then you have to see where it is happening and how it is happening. Just by looking at the moving averages on daily, I can tell it's not a pretty chart to look at on the monthlies and weeklies. And when you see that is actually the case on monthly, right? Same thing for the weekly as well. And then within that, you are trying to trade over here for a few percentages on daily. So this is not worth it. And on top of that, you're deploying strategies like buy above the high of the bar, which are greatly inefficient. So, you're just digging your own grave over here. You're stacking probabilities against you. Okay. See, let's see more examples. Now look at this stock. Look at the quality of the expansion below average. And then look at the kind of contraction. I mean, what exactly is happening over here? And the same thing carried out here. See the volatility on the upside, then on the downside, then again on the upside. So somebody will say, I'll buy above the high of this one. And you see next day what happened? You did actually go up a little bit up just to trigger you in and come back in. And come back where? Nothing. It's in the demand area only, which the stock created from here. So nothing bad has happened. You see? Keep that point in mind. Same thing here again. You probably thought, okay, I'll buy over here above the high of this one, and this candle actually triggered you in and came back down again. Look at this one. Somebody will be like, sir, I'll buy here, high of the bar, and it did not trigger me. Now, people will use this example to tell you, see, if you have entered earlier here, you probably would have had an SL. And if you're waiting for the momentum to come, this would have been a profitable trade because if the momentum comes, it will take you. But I've just showed you that internet loves to cherry pick the examples and throw in your face. That doesn't happen. So in this case, if somebody was looking to buy above the high of the bar, he probably got saved. But again, have a look at this guy, where it is and what it is doing. Look at the quality of the weekly. Look at the condition of the monthly, where it is, what it has been doing, what kind of contraction was on monthly within which you are right now. These factors matter a lot. And what cycle you are currently part of. I've talked about cycles on this channel. You can see the video is publicly listed. Now, this is a stock will come back in a bit. This one as well. Now, see this guy. People will be like, sir, inside bar, look at the quality of expansion is great, as you say. But then see how did the contraction start? Started with a minus almost 7-8% candle. Is that the way? Certainly not. And then all of this that is happening is within the bottom of this candle, right? That is where it is happening. So again, not a positive side. And have a look at the monthly where it is. Okay, at the location of push resistance. That is where the stock is, and just look how the stock has been behaving historically, what it has been doing. Single candle 34% up move. Single candle 34% up move here as well. Here as well, single candle 38% move. And see which part of the cycle this is currently in. So if somebody is actually looking to buy these bars and all, not really sure what exactly are you trying to do. Same thing happening here as well. People will be like, this has now come to its 10 EMA, looks like a great area to buy. They buy over here, stock comes back in. Why? Because look how much it has gone up. It's it's pretty simple now and basic for the stock to contract on a scale of weeklies and monthly. Nothing surprising. Same thing with Apex. People will be like, I'll buy above the inside bar, the high of this, the next day triggers you in, comes back in. And what do you blame it on? The market conditions. Well, have a look on the monthly. Let's see. Pathetic monthly. On top of that, pathetic weekly as well. And then this is the daily within which you are trying to do some sort of trading. So that's not the way. Same thing here as well. Now, I'll show you the importance of buying right through this stock. Somebody was here, buy above the high of the bar. What happens? Triggers you in, comes back in, stopped out. Now imagine somebody who puts in some brain into working on his entries and all, and he actually buys over here during consolidation while you are near to the ideal zones of buy. By the time this stock makes a high, he's already up by 3.23%, allows him a great deal of room for risk management and position sizing management. While the person who bought above the high of the bar was only up 1.35%. Where will he get the room from? How will he get the time from? Where will the liberty and freedom come from? It will not. Until and unless you have great entries, you you are bound to have losses beyond your control, and the profits will be less than what it should have been. That's a crucial thing to understand. Same thing again, people will be like, buy above the high of this one, get triggered in like this. Now look at this guy. Yeah, somebody says, great candle, people call this as undercut of 10 moving average or whatever. Then you buy above the high of the bar the next day and this happens. And then you blame the market conditions while the stock has done nothing bad. You really cannot say the market conditions were of any kind by looking at this. It's doing what? Consolidating within this good demand candle, right? That's what it is happening, and all these candles were offering you great buy opportunities. But for some reason, somebody decided that I'll just go and pick a random number to serve me as my stop loss. And then you go and take these SLs. But now it's even in a better position, right? If you're looking to take a trade in this one. That is what needs to be seen. We'll talk about this again. So the stocks I have to talk, I'll put them over here at the bottom. Now let's see this one. Again, right? You love to buy above the high of the bar. You're away from the 10 moving average. And then the momentum does come, but see where it is leading to, what it is doing. Let's see the monthlies. See these candles on the monthly and see the cycle of the weekly. Where you are in, what are you trying to do? And just imagine buying above the high of this or even buying above the high of this bar. This guy triggers you in and comes back in completely. Right? Happens. Same here. You want to buy above the high of the bar over here. This guy triggers you in and falls back in completely. Why this happens? Have a look at the cycles. Where the stock is. What it is doing. Now, when it is coming actually near to the great areas, you are like, hey, I don't see a buy because there is no inside bar or a pattern that you have practiced. But it's actually near to a great demand area now. See, people inside bars, high of these bars. But have a look how pathetically it is positioned on the monthly, what it is within, and what the weekly is doing. Try to have a look. Now, see this guy. Now, it's time that we study these stocks. So, one, two, three, and then there is one more, which is this guy. We'll study these names. Now, see, on this day, 19th of June, the market conditions were horrible according to people. All right. Yet, this stock on closing basis was able to give 2.5%, and during the day, it was able to give you almost 7% while people were running away with stop losses and whatnot. So, my question is why this happened? If the market conditions were bad, if the market was falling, why did this work while the other ones did not? Is it simply just the market conditions or was there something else? There was something else. Look at the quality of expansion. Great. Look where the monthly is. Okay. Look where the weekly is. And look where the daily is. Now I'll do a comparative analysis of this one as well. But see where the daily was. Came near to its 10 moving average, right? This is where it opened and then closed again up. After that, each candle was within this candle. And this guy showed you a VCC near to the 10 moving average and near to the low of this one as well. What happened? Great opportunity. Now, see this stock. All right. On 19th June, this went down by 4%. And the day previous to it, it was up by 2.84. What was happening here? First, see the monthly. This is the one I just showed you, and this is the one now we are studying. The monthly, almost conceptually, it's the same. The weekly, pretty much the same. Yet, they gave you different returns on 19th of June. And the market condition was same for both the stocks. What happened here? Where is the demand candle within which a contraction is happening that will allow you to push up? There was none. There was none in this case. While this one had it. And again, I'll show you it has happened previously as well. Looks similar. See this candle comes close to 10, goes up. Then both the candles are within this one. Close to 10 EMA, close to the low of this one the next day. Great up move. And see the low this candle made, very near to this one. Great up move you got. After that, see what happened. You made a little high, then you went again down. But this time, look at the close of this and this candle. And then see from where the demand came right next time. It came from near the lows of this line that I've drawn. This is conceptual work at its best, regardless of the market conditions. If you really have that eye, if you have practiced, if you know these concepts, you will be able to take these trades very peacefully without any stress. Otherwise, it's going to be difficult for you, regardless of the market conditions. Because I will tell you, if the market conditions are great according to you, you even pick a great stock, but if your entry is horrible, you are most probably going to end up with less profits than what you could have made, or the worst case, you're going to end up with loss. And if your entry is really great, and even if the stock selection is poor, you will end up with much lesser loss than what you originally planned for, regardless of the market conditions. Now, see this guy. Grid expansion comes close to its 10 moving average. That's where you start getting active. And then it goes up. Now, compare this to this guy. Look similar? Conceptually, there are differences. And that's exactly what you have to see. So it's not about your inside bars. It's also not about the market conditions. It's all about how you read it. I'll show you something. The small cap index, did you see what it did? Over here, people were like, this low has been taken out and now we are going down, back up, or do not trade, the market condition is bad, the breadth is bad. What happens next day? 1% up. The index is 1% up. What happens in Nifty? People were like, it's an expiry on this day. The operators are not letting the Nifty go anywhere and all that. And people, I'm pretty sure I was short just because of the war. What happens next day? You are up 1.29%, one of the best days the Nifty have had in recent times. So what's happening? The market breadth was wrong, not the ideal time to take trades and all that. So what exactly is happening here? Concepts at work. So cut the noise, let people talk. Focus on what is in front of you on the charts. Trust on the Rich Road framework, and I'm pretty sure you're just going to do pretty well, right? So I believe I've done my work of showing you about the things which are usually not shown on the social media, um, because the excuse of risk management and bad market conditions, is always put in front. But I hope this enlightens you and makes you aware and pushes you to think for yourself. All right, I'll see you in the next video.